A major report on the looming world food crisis escaped the headlines somewhat last week, but its significance for Australian farmers and graziers, indeed the world's farmers and graziers, cannot be overestimated. Oxfam, the not-for-profit charity fighting world poverty, is warning that a broken food production system is reversing decades of progress against world hunger. Oxfam says new research reveals that the price of corn, already close to an all-time high, will more than double in the next 20 years. The research also points out that by 2050, demand for food will rise 70%, but the world's capacity to increase production is declining. Scary stuff, and it should make us think about the future of agriculture research and development in Australia. Over recent years, I've heard various ministers trumpet how much they've increased spending on R&D, which proves you can do anything with numbers. The amount has risen, but as a percentage of GDP, the money spent has actually decreased quite a bit. Moving on now, and let's start with beef exports, where processors are having a real struggle. Total exports to our major markets are falling. For example, in the 5 months to the end of May, the volume to Japan is down 6% from the same period last year. For the same period, our exports to the United States are down a massive 37% on 2010. The bright spot is Korea, where sales are up. But the strong dollar and intense competition in Japan from America will continue to pose a major challenge for Australia's beef producers. Now, at the sale yards, numbers lifted strongly last week as the weather cleared. This was especially the case in Queensland, where restockers were very active. Most categories rose. Beef Central newsletter reports the substantial diversion of low-quality cow meat away from the weak export market into the domestic arena. Despite this, the only negative was with feeder steers. And the Eastern Young Cattle Indicator shed 8 cents to settle just under $3.90. Lamb prices headed south with some speed as supply lifted. The consensus was the quality is exceptional for this time of year, but in the end, the numbers told the story. Over $5.50 a kilo, that's still a pretty handy price. And sheep numbers were also up. Dubbo and Ballarat had very big yardings. To grains now, and traders are puzzled, if not fretting, over Russia re-entering the export market, and Kazakhstan and India. Add to this the dry in Europe and China, and too much rain in Canada. So wheat dumped nearly 50 cents on the week. It's worth noting that price is still about $3 a bushel, more than it was this time last year. Corn remains strong on the back of ethanol demand. And for those interested in bushels and tonnes, 1 tonne of wheat is the equivalent of just less than 36 bushels. Here in Australia, we trade in tonnes, and the ASX reports active selling for New South Wales wheat last week, while WA wheat futures were steady but somewhat soft. Once again, those prices are up on last year. Some drizzle in the west is helping, but in the east, I'm told the mice plague south of Dubbo and into Victoria and South Australia is appalling. In this region, many farmers have actually seen their emerging canola and wheat crops eaten out by mice, and they've been forced to replant. Old crop spot prices were off a fraction last week. Wheat and canola slipped. Well, there's good demand for sorghum. That wheat price is $90 up on June of 2010. And the good news continues for wool growers. Prices are now at their highest levels for the season in both Australian and American currency terms. The Eastern Market Indicator is now at 1,398 cents. That's a lift of 1% over the week and came on the back of good buying from China and support from Europe, Taiwan and India. Finally, a takeover that wasn't. The farmer-owned Sunrice business, which knocks out around 500,000 tonnes of rice a year, has knocked back a takeover offer from the Spanish conglomerate Ebro. Shareholders met at Jerilderie last week, and although the vote was close, it was a no. Chairman Jerry Lawson does not expect an improved offer from Ebro.
Every indication that they've given so far is that they wouldn't, but who knows what the future holds.
Must have been a pretty tough decision. You owe $300 million and you knock back a takeover. Good luck to them. And that's the Landline check on the markets.